Now, if we look at the S&P 500 cash index, it's the same thing here. What I did was same. I did one, down in two, up in three, made a triangulation here in four, which you can do that as an A, B, C, and D in E. And then from here, you can look for another five wave to complete this third. Okay. And now if we anchor this wave four down here, okay, at the low, and then we can make the case here of this diagonal. Now, if this fourth right there, if you put this down here, which you can just make this thing as a three-way move against this wave two. And then from there, you can see the same, you can do the same thing. One, two, three, four with an overlap. And now this is fifth. So it's the same thing you can match by doing this with the cues, right? The point is that you need to make sure and that you just need to make sure that these wave count matches side by side. Okay, that is always going to be a challenge, but you just have to see that will give you a pretty good idea as well. Like, okay, if remember, the weakness will come from the tech sector. Okay, when the tech is going to roll over, S&P is going to follow the suit. S&P just not going to roll over on its own. Big heavy tech needs to take a hit first. Okay, so the Mag 7, the strength is the market strength. Weakness is in Mag 7 is going to hit the NDX cash and the Qs down. But so this is where I know it's very tricky, this fourth wave is. So either or I I can just leave the way it is and to see. Then I built the same zone here, which is the same 127 extension, 161.8, 200% here, along with 300, along with the 161.8, 3 versus 1. There's a lot of resistance here. Okay, these are very strong fibs, and they're very close to each other as well. Now, if this is a diagonal, your minimum downside target from here is going to be this prior fourth wave, which is this 59.21. Okay. And then it's a matter of how do we manage to put some sort of an ABC to the downside. Then we'll start to make the case of this fourth wave. Now, the only way we're going to make the case here for the fourth wave and how I know and when this third will and where it ends once it breaks this 57.67. Okay. If the price breaks below this level, your third will anchor your third will end up on the top. Why is that? It's because of this. This is a 1 hour swing chart. Okay. So I watch this every day. Um, it's at a 7 swing right now. Higher and higher the swing counts will get, okay, it's gonna increase the chances for a rollover. It is already showing me a downside target right now, 58.98, roughly 5,900. Okay. So the same 59.29.21 that I'm talking about is right here. So if you just want to manually label this thing like this, okay, that's your diagonal. So this is where you're going to see the reversal to the downside. There's going to be a minimum downside target. It could happen in one single session or it's going to happen in 2, 3 sessions. But when diagonal ends, diagonals have a very sharp reversal to the downside. Just keep that thing in mind. Okay, so when you have a triangle Okay, triangle always gonna have one because remember, triangles only forms in wave four. Can never be anywhere else. So there's a lot of Elliott guys that always track in triangles to see because this is called like more than up like 95% of the time you're gonna have a fifth wave to the upside anyways, because the price is just, you call it a distribution phase because you have a third wave that ended here, then the price is going sideways in distribution phase, and then that is if it's starting to go into a triangle, then you should look for a fifth wave to the upside. Because this count right there on the GAN will start one if it breaks this low. Okay, so we have a long way to the downside to see when the because what happens is the higher and higher the count will get, narrow the swings will start to become to the upside because it's going to go to 8. Now let's suppose this is 7. 7 can kind of like poke about a little bit more. Eventually it's come back down and that's going to be number 8. Okay. And then from there you're looking for number 9. And it just basically what the point is that as long as the price is making higher highs and higher lows, the swing count will will keep going up and up. There's no limit for it. I mean, counts can go up to 10, 13, 14, 15. Doesn't matter as long as the prices keep going up, meaning that the price is making higher highs and higher lows, the count continues. The count will reset if it's going to take out one of the previous swing low. It will change. So one is going to happen. Well, I don't know that. So that's what we that's the this so meaning that if we all love to play the upside, well, we all should know our downside risk as well. So every time when the price breaks above the previous swing high, which is right there, is going to act as a support to the downside. You see right there, price uh, made a new high, backed off, came back, retest, pop again. You see, it just price just consolidates. It took another leg down. Look how much consolidation is here for how many hours. I took another leg down. And then yesterday, the job report came out, gapped up again to the upside. So I'm looking at here. I don't really, I mean, I could do it on the wave count, which is fine, but I can just count everything on top of my head. It's starting to look little, and to get a little tight here for sure. So we'll see what happens. So I don't know. Next week, what do we have? CPI now because jobs are out of the way. Look how many gaps we have. It's just crazy to really gap here, here. I don't know how many down there. So back to this. This is where we at. I really don't need this to be honest, but I do it for you guys. But swings for me is more than enough. Um, but regardless what the case is, this fourth wave right there is coming. That's why I can tell you, which will pair with this. So your main invalidation here is going to be this 5481. This right there, 5767 low, will will confirm 100%, which, the third wave was ended. So whatever you are trading or want to stay bull as much as you can, you gotta mark this level on your chart, put a price alert on it, and then from there, I mean, yeah, I mean, it has a quite a bit of room to the downside. So you either wait for it or you says like, well, I understand that everything is up across the board, but I just want to sell something because I starting to hate this rally. Those are your own decisions. Though what you just literally trying to fight something. I did put a small trade on, as you all know, right here at the 6,059.90. I was starting to price the spread, and I was like, it doesn't really cost me anything to hold the premium because it literally has a positive theta as well. You know, it's nothing big because there's not. I know I will never open a bigger size position right up on the top and try to pick the top or see if it's gonna get rolled over. I was like, I'll test it with a small trade for now and see what happens. And if the swings start to turn directions, we can always add something different and leave the one up there on the top. But it's just like if you have a screen that literally telling you that direction is up, the direction is up. So there's no point for me and for you to look down when everything's showing, is heading to the upside. But the swings will turn direction when you have 3 down days. So that takes time as well. But now those 3 down days can, if depends what time frame do you do you count those 3 lower bars? That's another decision as well. So smaller the time frame is, choppy the swing is going to be, and you're going to get a lot of fall signal. But I mean, we'll make the case of this one way or another, but I don't know where this thing is going to end. But I mean, if I do the same thing here, 4 versus 2, is this, pin this thing. So this is going to be the same as your fourth wave right here. Now, the fourth wave can be shallow as up till here. Where does it stop? Well, we don't know that. I mean, I would just do this. Just build 2 zones. One here, which is between this 23.6 and 61.8, and then just make the other one. And now the biggest challenge is, how is this thing going to come into a play? Is it going to be either a flat or a zigzag, or well, we don't know that because what I see is this wave two right there. See how big it is? It's huge. Took a lot of time. So you just take this, put it like this. And then from here, because right now, every bull is chasing this print, 61.47, just to for the market to go, get to an all-time high. Same thing here with Qs. Everybody wants 540. Okay. So if you do get to 540, okay, well, how much room are you going to make to the upside, which we're going to find out. Now, if you wanted to see like if the when the market breaks out, see, hang on, go back here. So now if you look at this, So we're right here to this mark. When we have, I mean, the only thing that make this market see something. Now, if you take this drop, okay, which is pretty similar to this, because the reason why, because this low right there has put every single indicator down to this COVID low levels. Okay. Now, if you look at the price here, what happened is this, you see, price is gonna fight this area really hard. It's gonna give you that breakout, but it's gonna, you see, this is the COVID low. This is the high right there. And then from there, I mean, this is, you're talking 41 days of consolidation. Okay, you can do a bars, you can do a trading days, 41 days. That's what happened last time. Corrections are very subjective, so you don't really, I mean, what is it? It's a clearly three-way move, three down, sort of three up and three down. Make it like a WXY or whatever you want to count them as a running flat, ABC, really doesn't matter. It just looks like a three-way move. And then from there, market's trying to move back to the upside. I mean, the only risk that the market has right now is if the tariffs fall, like deal fall through. Now they're meeting again in London. So they're going to make a deal one way or another. So now the question is that how many times the market is going to keep buying that idea that the China and United States tariff deal is coming, you know? So they're meeting, market is rallying. Now keep in mind the markets are forward looking. Is the markets going to sell off when they're going to meet the deal? That we can, well, think that way as well. Market can only price into a certain level. It just then after that it just doesn't respond. It's the same thing right now. Like, but remember CPI day was like inflation data is coming out. The world was watching, you know, and now it's just like a regular trading day. Nobody cares about CPI anymore. They're trying to make that case, thinking like, yeah, the tariff is gonna be this and that, make it inflation or stagflation or this and that. But like again, anything can happen at any time. Nobody knows that this flush out is gonna happen this year and this fast. You know, I mean, we all experienced 1,000, 1,500, near 2,000 point drops in a one single session in this dip. It was wild how everything was coming in and like was like backed off. Now, if you look at this, see, see the drop. So now you do the same thing here, which I'm trying to show you. That doesn't mean it's gonna be. I mean, I don't know. I don't know that. But the point is that ending diagonals, they have a very sharp reversal to the downside. Just always remember that. Okay. Well, we don't know because this is all blank. There's nothing I can do, or I only trade what I see. I don't. You will never ever see me telling or giving people hope. Oh, we're going here, and then we're gonna come down here, and then we're gonna go up here. I don't do that. That just this is just a complete waste of time. I simply look for a one standard deviation move. That's it. So if we do a one standard deviation move to the downside is what? 57.61 is a one standard deviation move. So that's how I look. This, and then I will, if the market does rally to the upside, just look for one standard deviation move. Now, if we're sitting here and making a 6,500 and 6,700 target, I mean, you can set your long-term targets, but you know how many days, weeks, months it will take for this price, for the price to get to that to that print. Basically, what it is like if we take out the high, okay, which is the 6144, your 127 extension is sitting at 6,500. Simple as that. I just showed you the same thing on Microsoft, where Microsoft is sitting right now. We can do the same thing on Qs. So I rather keep my technicals this way rather than if this is the third, this is the fourth, this is the diagonal, this is this. I mean, Elliot is just gonna, not everybody can do Elliot, first of all, because it's very, very subjective. 578. So these are, I mean, how long is gonna take? Well, we don't know that. But as long as the trend stays up, the swing stays up, the direction stays up, yeah, I can make a reasonable target saying that yes, as long as remain the direction stays up, swing stays up, okay, we can make a case here for 578, which is a 127 extension after breaking this 540. Now if we backed off, which is fine, and then we'll go, that's the next case. Okay, so I mean, to label this thing, which is the same thing here, what you're seeing here is the same, like wave one, two, third wave. Now this swing goes up till here. You just count one, two, three, four, and sort of five, trying to make the case for this third wave that we just looked at, and then we just look for this fourth to the downside. So now you look at the downside here was 8.5% on this swing. Is there's no labeling here, but I'm just this is all I need. So you make the same case here, ABC to the downside. And now we're trying to see like, okay, after every three waves, what do we have next? A five. When the five will complete, what do we get? Three to the downside. After the three, what do we get? Five back to the upside. This is why Elliott is so fractal. It's just a repeating pattern, repeating waves. Five down, three up, five down, three up. It's just sequence, it just continues. And then once you complete those five, it makes one higher degree. And then you have the counter trend. So it's just the same concept, but it's just a matter like where's the time that the market is just gonna, like the price will just kind of stuck, like literally not gonna move much. It's just once the price will make such a big, huge move, well, it just has to take a pause somewhere. That pause right there, especially with the options, it kills you. You know, it's just the worst. I mean, you your direction could be right, But just losing time, especially on option, is just the most painful trade to hold or to be in that trade, because you think like, okay, yeah, market made a big move, the price has made a big move to the upside, been sideways for a while. Now I can get myself back in to see if the trend continues, and then we'll just look for a breakout, right? It's all about accumulation and distribution phase. So that's all it is. Every single chart you're going to look at them is going to have this look. Depends how the price, it's just going to take a pause and then it just goes up. Now, if this distribution phase here can reverse like this, yes, that's where the trend changes. That is your downs. That is where you say like, okay, well, I was wrong. This didn't happen. That's what I was looking for because I can clearly see the trend was up, went sideways for a while, and now it's going right back up. But that didn't happen. Price rolled over. The price rolled over, trend is going to change. Okay. It's the same concept. So let's look at a few things here. Um, Now, if we look at the daily time frame, let's go to the weekly first. Now, look at the weekly time frame here. So we put a low here. 1, 2, 3, 4, 5, 6, 7, 8. It has been 8 weeks for an S&P 500 cash. It didn't have one single lower weekly bar in the last 8 weeks. That puts you at 2 months, right? 4 weeks, 1 month, 4 weeks, 2 months, 8 weeks. In 2 months, it didn't have a one single lower weekly bar. Same thing here with Qs. 1, 2, 3, 4, 5, 6, 7, 8. As you see number 8 here, B8, at the bar 8. So what do we see here to the downside? We have 7 bars to the downside from this peak to trough. Now we have 8 bars to the upside. So we're down 7 weeks, or up 8 weeks. At least the down week, the downswing that we had here, at least we had one higher bar here, which is very small, but still is green, right? We didn't have anything hit anything here. Then turn into an outside week, another sharp leg down, and then another leg down here, and then from there finally made his way back up. These mean reversions are just insane how they work with time, over time. Look at this. Well, this one didn't really play out. This the only one happened in a cache. But you look at the Qs and this IWM, look at this. The point is like when this mean reversion right there triggers, and there's another one here. It triggers, you want to make sure this low doesn't get taken out the next week. That's that's the beauty if this plays out. It triggered here. Yes, the price did manage to break to the upside, but it reverses. So it failed for the next 2 more weeks. Then after 2 weeks, this one triggered. Then after another 2 more weeks, there's another one triggered here, and then it just keep going. This is if you ever see this is a failed one. I mean, again, I put a lot of time in this thing. Right? It basically what it does is like it picks the bottom. Okay, and there's some you can nail. a really good bottom from the from this one. I've done many of them, but sometimes you miss them. It just depends like how fast, the you coming down. But but this thing works really good on indexes one way or another. So weekly here now, if we look at here on IWM, so we have at least kind of choppy run. I mean, so we how did we end it this week? We have a higher bar, outside bar, okay, and we had a higher bar here on the on diamonds. So I mean, looking at this, and now we go back here the daily time frame. Or now, hang on. So this one shows what we're down 2.39% from an all-time high. We're down 2% from an all-time high in Qs. We're down 13.5% on IWM, and we're 5.13% on the diamonds. So it's just a matter of, I mean, this is it's a clear, it's a clear V to the up, back to the upside. Now go back to the daily time frame. Now the daily time frame for this week, we had one, two, three, four, five. So it has been 5 days now, meaning Monday, Tuesday, Wednesday, Thursday, and yesterday, Friday. So there's this week, every single day that we're just making new highs. See? Every single day. So this run that we just had is just, I mean, if somebody's trying to tell you this is a bear market bounce, the guy is a complete idiot. This is a very strong, price action. You have 8 straight weeks, which is 2 months of melt up. And you have a non-stop of weeks after weeks that look at this entire run from here. It had a one down day, which is right there, which was May 30th, meaning that Friday it kind of sold off. It ripped right back up. This is where the swing turned down. It's just something here that you just 4 days, 4 weeks, 3 months. I've studied S&P for a very long time. You just have to pay attention to these numbers. If you ever come across these three numbers, is you're gonna see a very strong response to the upside. If you have 4 down days on an S&P, you can write this thing down. 4 down days on an S&P, 3 down months on an S&P, and you have 3 down weeks on an S&P. Okay? 3 on a daily and a weekly, and 3 on monthly. My S&P is gonna have a very strong reversal. You can at least get a 50% retracement of its entire decline of whatever the 3 to 4 days is. It doesn't happen that often, but it does happens. It happens. It's gonna happen again. Because I can show you so much. Um, you see, 3 months. Look at this. I mean, the price does matter, but the point is that you have a higher bar. 3 here. Look at that. It's just I mean, I can take you far back. 3 months is one full quarter. Keep that thing in mind. You have 500 stocks. If you only look at an S&P, I mean, you have 100 index, you have 500, you have 1500. It's not gonna stay down, more than four, more than three. It could go down for another week, but that week will reverse the next following week. It's just, I've seen it so many times. See, it doesn't have a continuation here for three. This one has, right? Nah, not straight three. I need three straight red bars. Two here, here, three here. You count this. One, two, and three. Outside bar, lower bar, no, not this was the inside. So you have this. Just look for these three bars to the downside. That's what you call a monthly return. Look how market eyes see here, right there, three. Look at that pop. I can just, again, 3 months is a long time. Okay. But it doesn't mean that it's not going to happen again. It was this right there is because I was watching, I had my eyes on this low right here, which is uh, clear this of 2024. I was like, if the price is gonna come back down and break below this low, we can have a lower yearly bar. You know, that could bounce, but once you have a lower bar, it just makes it very hard to fight the upside. That's what I've learned, and this is what I've noticed so many times. Once the bar turns red, I mean, you have less than, I don't know, 10% that it could reverse, meaning that it will turn into an outside bar. Other than that, it's gonna close red. Once it goes red, just a lower bar. It can only turn into a blue, which is the outside bar. If it's green, it's just gonna stay green. It's the same thing here for this month. We had a higher monthly bar. The higher monthly bar is just gonna stay green for the whole month now. And we just started the month. The only time now that this bar can turn blue if it's gonna break below 55.78 this month, by the end of the month. So we have a low here, we have a high here. Now, how high this bar will go, well, we don't know that. But what I'm trying to make a case here is what is the average monthly range, okay, that you see here each month? And you can, once you once you study this, you will kind of have a pretty good idea, like, okay, what I mean, it doesn't mean that it's going to hit to the penny, but you can come really, really close to it. What I mean by that is like, look, 6.15, 6.10, 6.75, 5.17, 5. You see like how many of them are in five and sixes? So instead of like fighting this point, like decimal, whatever the number is, you can just round it off, just say like, okay, either a five or a six. How many fives do you see here? Look at this. Except you take the biggest rip to the upside once you had three down months, which the last time we had three down months, S&P rallied 9.29% in one single month. This one. That's a 10% move in one single month. S&P averaged 10% a year. Well, nobody knows that, but that's what it is. This is what we call a mean reversion. Price is gonna get to a certain point, being down for three straight months, making lower lows. and then it just rips right back up. In a one single month, it just wash out everything. So the point here is like, what do you see here? You see a bunch of five. This is we're looking at last year. See five, five, like so many of these five and sixes. So this year we had six, five, went to eight, went to 15. That's where we had the huge dip to the up to the downside. Back to six again last month. Seven. So the point here is what? The point here is this that each month, as you can see, the monthly range, okay, is approximately 5 to 6. That's it. So there's only how many times that it went down to 3 here. This is the only one month. This is 4, 3.5. That's it. But the rest of the number, as you can see, is all stays in 5 and 6. So if we just make a case, okay, of an average rate, you just look at a bunch of them and just take out the average. So that will at least shows like, okay, if what could be the expected move if we already have a higher bar, okay? It's the same thing like what we're seeing here is all higher bars. So what will be the 5%, let's say 5% move of this, just to be on a reasonable side, right there, put you at 6150. Could be 6, 62, could be a 5 right here. So if this month managed to push, okay, get to this 5% range, just to be on a reasonable side, I don't want to go crazy. Just make a case for 5, okay, from this low. And if this range gets there, it will put you at the 6150 mark, which is 6147 is the all-time high, right? But we're not looking at the all-time high from the closing price. We're just trying to calculate the range of the entire month, and then where it closes, well, we're gonna find out. You see, you had a 5% range, but look at the close, way down. So we don't know where the close is gonna be, but by the end of the last couple of days. But what you're looking for is you're trying to project the upside based on the previous range that you had for you just take the average of all the previous months and to say like, okay, yes, if I am bullish, what will be the upside that I could expect if we would have a higher bar? If we have a higher bar, you take that higher bar compared to the other ones, and it will kind of gives you an idea like, okay, yes, if we do manage to hit a 5% move like the previous time that we had for so many times, that will be the expected upside that I can look for. And then we have our fibs. We can always look for those ones, but that will just kind of gives you a pretty good idea. Okay, what would the upside case that you can make. Now the same thing to the downside. The downside here was 8, and here was roughly 6, right? Not this one. This one went kind of a little crazy. Now if you make the case here to the downside, look, 6 here, 6.5 here, 5.5 here. You see, everything is in then 5 and 6s. Same upside, same to the downside. So the next lower monthly bar that we're going to get, that would be approximately should be a 5% correct. So, people who call, if you call for the 5% pullback, that's what it is for one single month. The 5% range that you see here is over and over again. This 5 and 6 number on an S&P has a very strong. Let me show you something here. Just pay attention to this 5 and 6. Okay. 5 up. This is a time signal on GAN that I have. Okay. So it calculates time. 5 down day. It turns into an outside day, but again, down. 6 right there. Massive volatility day. 6 right there. Down day. I can take you far back. 6 outside day. Meaning that after 6, there is a very high probability that you're gonna have a volatile day after hitting that 6 number. The 5 and 6 is the same range that we just looked at on a monthly, and it's the same count on the swings that will gives you a pretty good idea that we'll have a down day tomorrow. Because it has, you can remember, market is fractal, right? This is why when you start to put, like, for me, my style of trading is that I build puzzles. Okay, what I mean by that, I'm gonna connect a lot of dots. Okay, and when I'm gonna connect all these dots, and then I'm gonna look at my odds. Okay, is it my, then I'm gonna make the bet. That's how I do it. I'm not a one chart guy, like make one chart, take a shot, okay, hold my breath and see if it's gonna work. I put multiple things together, to see how many odds are in my favor, to see if I could pull, it's the meaning, like if I can get a winning trade out of it or not. Because I'm looking at probabilities. I don't know what's gonna happen. Nobody knows that. But if I have multiple odds in my favor, I mean, your chances of winning a trade is much higher as long as you have time, you know. So that's what the system that I built over time is just, I took GAN, merged with Elliott. I was like, I have two different strategies. Then I throw a couple signals. Then I look at RRG. I was like, okay, I have signals up, direction is up, swing is up, Elliott wave count is up. I was like, okay, let's go. You know? So it's the same thing. Like, I'm trying to count a swing count here as a 1-2. A 1-2 is the same as a wave count, right? So let's go back here to Croc. The trade that we're in right now, right? Swing 1, swing 2. So it's the same concept. Now, I don't know what's going on with this stock, to be honest. This is crazy. Um, I bought them at what, 101, which is fine. So it had a VWAP here off the lows. This is a VWAP off the highs. There is no news on this stock from the last 1 month. This box right there that you see is a 1 week box. Okay, it's the called the GAN time box. So the time box is used to create a visual reference of a time and the price movement located within the selected period. This can be useful when trying to identify a trend that can use time in their calculation for their important reversal dates. When placed on a chart, a box is created around the selected amount of time and price history. So that's the time box. It's a very good way to visual a chart because when the box are stacking down, obviously the price is declining. If the boxes are stacking up, yeah, the trend goes up. And then if the box is starting to go sideways, well, then you have a choppy market, choppy price action. So in this case right there, now if we look at this is the daily chart. This is 1 week, all down bars. Second week, all lower lows. One single day, as you can see right there, this bar was a higher bar, and it was a doji. Ended up being a doji. Every single day, this down, this outside bar, this, and yesterday it ended the day with an inside day, inside bar. It's just crazy. I mean, 17 days. Okay, the stock is coming down, which only had a one higher bar. I mean, I think it is trying to hold the zone right there. As you can see, it, I mean, is this week we didn't had something like this kind of a drop. It's just, I think this is just trying to trying to form a bottom here. So it should get a bit of a pop, get some upside. But we'll see what happens. I mean, we don't have a time running. So we'll see what happens. The upside VWAP from here is at 110. The price yesterday closed at 101. So that's like what, roughly a 9% move, 9.10 point move. I mean, if it eventually can manage to make a move back up, I mean, it's a good company, but a growth stock being down like this without us, there's not a single news out there. So either somebody's selling this stock pretty hard, because if the stock just if a growth stock just literally sells off like this on no news, nothing. I mean, somebody's in that stock, dumping shares like heavy, you know. So we'll see what happens. I mean, I have I built this zone to see if it looks like that the price is trying to hold. The worst case is that if the price does manage to come back down again, this is going to be the second zone, which is around this 92, 94 area. Okay, so this is the some I'm trying to see if 100 to kind of like 94, probably like 6, 7 point range that we have between this and this zone to see if the price can manage to find support here, and then we'll see if we can make the push back to the upside. The swing is valid. Direction of the swing is obviously down. I'm really hoping that this buy signal can trigger, but it's not there yet. So I'll wait. I think it's a good price, but this kind of a beating the stock just it's taken lately to see if the price can make a move higher toward this to the weave up. So we'll see what happens. So weekly we did daily Meltem is up. I mean, I was pretty impressive yesterday. Look at this thing, man. It is crazy.
Yep.
This is a 200 EMA on IWM. Failed, 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 backed off, failed, failed. Now finally, I mean, it was here, kind of moved, came down a point, I would say, because of the passage of time. But how many times it like it was struggling hard to break this 200. Look at that. Finally, it gapped up yesterday and closed above this 200 EMA. The 200 here on this one is 417 on the diamonds. I mean, this is still down 13% off the. You see right there, look, five down, six down. This is a very good time signal. This 5, 6 number, I do a lot of comparison, look around and see where I can find multiple charts. I can show you plenty of charts that I've looked over the weeks. Is to see like what is the price relationship that the price has with the time with this number 5 and 6. And you can basically the point is like if you buy puts on fifth day, if it ended, right? And you manage like happen to like manage to stay in the trade and then you happen to get another print at 6, you have a 95% chance the 7th day is going to be a down day. You're basically counting 5 or 6 higher bars that will either give you an outside bar, meaning it's going to have a pretty sharp dip, and then with the reversal, because it does all depends on the trend. Well, definitely, obviously, or if you have 5 or 6 higher bars up in a row, your trend is clearly up. But that's a pause that a short-term puts can definitely come into a play, but it has to hit that 5 or 6 number. So it's a short-term trade, but that because the thing is this that if you see here a one outside bar, yeah, I mean it could definitely pay you a few bucks. It depends how you position it. And then the next day you go right back up because your trend is clearly up to the back to the upside. And then this little green band, I just put a 5 um, SMA here, the green and red. Just a small band that I just calculate look at the 5 day moving average to see where it is at. Right now it's at 59.63. This one is at 526. But basically what it is like as long as the band is green, meaning that the price is closing above the 5 moving average, and then the price closes below the 5, it turns red. So this is all green. See all the closes. This one little reddish here that turn right back up. This one right there, you see, is all green. Even the fact that the price does break below the 5, but it closes above. You see, all the close. That's what I'm saying. It's tough to buy puts. you know, it's just the screen is everything just too damn bullish here and just like this. I mean, where are you gonna find weakness? You know, like you go to top 50 here, which I look at them every single day. It's just everything is so damn mixed. It seems like when market is open and everything, it's just there's a very handful of stocks are actually moving. If you notice that, not it's not a broad rally like you see like stocks are just ripping. I mean, it's just very weird to be honest. Not gonna lie. It's just if you wanna look at some of the Like, okay, let's take a Dow 30 stocks. Now, if you take a Dow 30 stocks, look at the profile. Okay, which is the strongest one we have? IBM, 22%. Boeing 19, Visa 17, 14, 13 here, this. So, which is the worst one? UNH, of course. Then the Merck, Apple, Salesforce, Nike. So these five stocks right there at the bottom are the worst one so far. Got a Home Depot 5.5, Chevron, Amazon near the flat line, Caterpillar near the flat line, Procter Gamble is 2. That's it. So I mean, yeah, I mean, just one, two, three, four, 5, 6% moves is fine, is positive, is green, but what do they think that thing will pay? Goldman Sachs 7, JPM 10. I just we'll see what happens. I mean, taking rotations and stuff and see what if something is rotating out. I mean, those are the only possible trades. But everything is just I don't know. I mean, I don't want to sound negative, whatever, but it's just the strength is just not it's not something that you see like what was here, like when we were like rallying to the upside, like everything was going up, like the AI boom and Nvidia and all these. Now we're halfway through the year. I mean, well, we're sitting at what, 2%? All we did is like we were down 7 weeks, or up 8 weeks without a single week down, you know? So roughly 2 months down and 2 months up. It's just a crazy. Like, what do you even make out of this? I mean, you making a V, fine, but you just basically lost everything and you just like basically gain everything back up and you're sitting right there at the flat line. Now, how much room you gonna make back to the upside? Well, that's the question that's gonna come into a play. That is where the market is thinking now is to how to absorb, take these tariffs and what kind of impact that it will make to the overall economy, or it's going to spike inflation, or what the effect of going to happen on the prices. Because none of these companies wanted to give out any kind of a guidance for the next quarter either, because they don't even know anything. They don't even know what kind of a deal is going to happen. The Chinese are not easy to make a deal with. They're gonna, you know, they're Asian people. They're bargain shoppers. They will suck your blood before they're gonna sign anything. So we'll see. I mean, what happens, what kind of a deal they're gonna cut. The only thing that kind of really surprised me about ECB, I mean, eight, I mean, I think they're pretty much done as of this week now. I don't think there's any more cuts coming for the ECB. I mean, it's zero. We're like on a totally different path when it comes to central banks around the globe compared to us. Like, I don't know. It's confusing, to be honest, if I really think about it. You have a high rates, you have a market which is sitting at 21 times earnings on such a high rate. Housing market is it's literally dead. So now if you're gonna cut rates, which he's trying to pressure this to cut rates is gonna boost the market, which technically is, but I don't know. I don't know. They know something that we don't. Why is he holding it for such a long time? Bank of Canada, all these banks around central banks around the world has cut rates except us. Eight. I mean, if you were talking about like, okay, three, four cuts happened, yes, yeah, we should react, we should do something. No, they went to eight. 8 months in a row, based eight last meeting of ECB they had. They've been cutting rates every single time. So he's slowing down the economy. Well, he definitely got a big A on the housing market, but stock market is just it's on a totally different path on such a high rate. The only area that get hit hard with high rates is this Russell 2000. These two and these value stocks will manage, but growth, there is absolutely not a chance. Or you can say like these companies are getting killed with these high rates. Yeah, the impact happened, when the yield spikes up and this and the market tips over, this and that. But that weakness is not near to be found compared to um, on a Russell 2000. These are smaller companies, they they live on these loans. They have to borrow money to survive. These are cash machines, especially Google. There's Apple is. We'll see what happens. I got that email as well because I'm a shareholder of Apple. So I got they have the event coming up. I believe they have some announcements to make to see about the AI or whatever. They've been so behind. So let's see what Apple has to say next week. Um, go from there. Um, do looking at this. This again, if look, I have we own MSTR. Okay. I've been bullish on that stock for a long time. Um, if this this is got triple combo, we have a pretty clear five waves up to the upside. So I'm trying to say and like you see like this decline right there off the 430. It just sees how much overlap the price has. So it's some sort of a correction, which we can try to make a case here for if we have a completed five waves up, we're gonna have a three wave or whatever, a triple combination correction to the downside. This is where we at between this 23.6, 38.2 sitting right at 342, 3-year highs at 333. And we'll see just when I put a channel here where we have to see like if the price can try to see if it can make a move, back to the upside. What we're looking for is if this is the low, we have a high here, this is the higher low to see if it can find support here, and then it can try to see if it can break this 430. Okay, because the 78.6 is a sitting at 452. So we're going to be closely watching this zone. Okay. This 450, 452 area right there, this is a 78.6 off an all-time high of 543 down to low. Okay. So this is going to be a key area that we'll watch and see if the price does manage to make a move. Because this is the one, this price right there is going to take you up here to the all-time high. Okay, this is always going to be a last resort. You're not going to instantly break this one either. So just keep that thing in mind. So this is the upside. zone 434.52, and the price needs to find support here. Okay. Now, how we can make a case here for a third wave by keeping this ping in a second is we can do an RG, which we right there. So it isn't a lagging quadrant, so which we have the wave two is working. So I'm watching if it's in the coming days if it can form a hook pointing to the upside, and then at the same time we'll look for the channel resistance. You know that we have the channel here to see if we can break out the channel. Then we'll make the case to see if it's starting to rotate, starting to head toward this northeast direction. Then we'll look for the breakout. So gotta watch. Okay. I change that because by default it goes up to optimal because I have the data from IQ feed. They use a ticker SP500.X. Weird. So I gotta change this, change it to every time. Um, you want to look at the weekly on MSTR? Yeah, weekly is here. I can change it here. Weekly is good. Weekly is great. It's just daily just has to run the course. Now you have to keep that thing in mind that RG is a great way to look at a price where you can look for a momentum and you can find a really good alpha. It definitely takes time, but not every we gonna be able to hit a pretty cute entry on every single trade. But if we have enough, what I've noticed that if if I've most I this is plenty of weekly is a very long time frame because this one, this is what I watch. Let me show you this. This. Well, this I change this one to a NASDAQ. This is a 100. So these are 100 stocks of a NASDAQ. So this is what I watch every day, right? So daily is it updates in the real time. It's just all based on, how the price is trading and momentum and everything. The MSTR is right here. It's a NASDAQ 100 stock. So it's just like something like this, you see. Now, what I noticed and that's how I trade is if I'm gonna find something here in a lagging quadrant heading northeast, so if I have that momentum that I could find, and if it's kind of further away from the benchmark, because this is what I want to be. I don't want to sit here too close. Those stocks don't not gonna move much. I want to be a little far away from here. And then if I buy 2 months, not 1 month, 2 months, okay, just do a spread, I have a pretty good odds of making money on that trade. It's gonna take time, which I know that. But as long as I can find momentum and I could find alpha, which I have from here, from RRG, and then I have to look for the right swing. Either is a 1-2 swing or is it a 4 or 5, depends what the count is on the swing. Then just let it work out, you know? So, I mean, looking at the whole thing, yeah, it's like a bunch of spaghettis. It's really messy, we can always filter it, you know, and we can always filter this thing. What is this guy? So I have ways around to just to filter certain only stocks that are actually heading in. Like I have a lagging quadrant here, which is heading toward northeast. We can just run a scan on that one. Okay. So I can do either on all 500 stocks. I don't want to go that huge. I can only do 100. So let's do that's it. So these are the stocks now in an S&P 100 index. See, they're all heading from the lagging quadrant that are heading toward the northeast direction. So I just filter. So I have 100 stocks. I don't care what is in the weakening, what is in the lagging. This is what I'm looking for. I took a shot at FedEx, as you know. Look what this FedEx stock is doing since we closed the trade. Nothing. This stock is something. For 2 weeks, I closed that trade literally break even. Look what the stock is doing. I think when did we open last week or something? I through 2 days or so I closed. It's like I'm done, I'm out. I can't. I don't want to take this kind of punishment. Horrible. Watch Intel. Intel be might be due for just too much too much beating. You see how narrow these swings are? And it binds me. Oh, there you go. Well, this might watch watch this one to see. I don't know. I haven't even remember the last time I actually traded this stock. Just to me, just a failed company to be honest. Well, if you watch this, see if you could. So you got two swings high here. Didn't do this. Low, this low. Yeah, this low gotta hold. If this signal right there triggered, this low must hold. Well, swing is up. That's a good sign. So your direction of the swing is up. If you want to really take a shot at them, you gotta put a super tight stop loss right there at that 19.31 at the low and see if the I mean it's a pretty good risk to reward is to see if you can make a higher high swing. As long as the direction stays up, see if this thing continues to the upside. So we can take this high, connect to this low. There you go. So now we have this, throw a VWAP from this swing. Okay. 20. Throw a VWAP from this swing. Okay. And throw a VWAP here. So now you have, didn't really touch either one of them yet. The one from the low. Okay. So you got a bunch of, you got some work to do, but anything can happen. If this is definitely has a plenty of alpha, that's for sure. It's way far from the benchmark. So it's definitely going to take a wider rotation. If that rotation will come into a play in the coming weeks and see if the price can hit this 2288, then we can project the upside. So what are you fighting for 2 point move to the upside? So I don't know how much. Oh boy, God, such a low ATR play. You see, like stock moves like 1 point on average, even less than that. Yeah, it's very low. Here at least you have a bit of a higher ATR range. Not here. Looking at the standard deviation move, 1 and 2. Okay. I don't even remember the last time I QCOM 150 is that's a nice diagonal here. One, two, three, three, four, five. Could definitely take a look at this as an 8 swing move. The same thing we did on Chipotle, remember? Is working. So sorry, I'm just gonna move around fast. So we'll have oh geez. God, I hate stocks when they split. This motor wave is gonna give me such a hard time. So we're looking for this. Um, Same, we have diagonal up, three down. Now we managed to pop to the upside. So this is one. So now we'll look for a two. I only have it up to here. So now we're gonna find support here in two versus one, which is right there, right here. So from here, what we need is this third wave to the upside. Okay. Five up, three down, smaller five up, back off a little bit in three and two. And then from here, we look for this 127, 8 points. There's some strong fibs here. But my point is just to take a simple measured move, whatever happens here, one, two, whatever happens, who cares? It's just to take us distance travel in one, projected from two, 100% relationship with a 57.74. Okay, so just to make a 57, I think it's a pretty good target for Chipotle from here. Just to play a simple, measured move. So you have 8 swings here, and the same thing, you look for a measured move to the upside. Now I can make the same. I don't have to label this thing here. I can just usually count it. Like 1, 2, 3, 4, 5. This is a some sort of a same with A. You want to put A here or one here, it doesn't matter. Or you can just make a B here. You can make a two, and then from here we look for that 100% measured move. Same thing here. So you can do it this way. You need to find 8 swings. That makes that's that's gonna help. Um, what are we gonna do? So, so this is a 3 bar swing. Throw a two here, nothing here. Let's see. This thing is gonna go hard. It's a good company, Qualcomm. My favorites ones are NVIDIA and Broadcom. You all know that. Those are the. But it's just let me show you the resistance where the stock is gonna face. Oops, is here, right there. The reason why it being is you see the length of this swing, how much decline? You have 28% decline. So every time when you have such a huge drop and then you're gonna end up making them, then you have 25 here, right? So the rest of them are all like 9, 10 kind of range, 16 here, 12. You see, you have 25, 20. So every time when you're gonna have a price gonna come right back up, that area right there is gonna be a very strong resistance. As you see right there, what happens? You see it pokes above, backs off, goes up, backs off. It's just fighting this zone. So the breakout for this stock and the bet that you can make on this stock by looking at the price here is 150. 150 is the one that it could push, clear that resistance. Eventually it will, or it just continues to the downside. That's where you're wrong. But Qualcomm bet would be a 150. You betting this resistance along with the trend line resistance. This area right there breaks, and this swing right there breaks above this 156. This is your breakout zone for this stock. I can tell you that right now. This area is gonna break. Then you can project the upside. But there's no point for me to run a big hope to um but we force you see if you actually get what you're looking for. Projecting something upstairs takes less than 5 seconds for me to do it anyways. So those are just the prints. But it needs to clear this area first. I mean, there's a bunch of ways that, we can. I'm always on a hunt, as you guys all know that. Just something fits right, and I just don't. Um, it's a tough. It is interesting. They made a. I've never seen 200 before. Russell actually had a 200. Where it went right there. I was at 50. HIS is all here. So I know about the S&P 100, and I know S&P 400 mid cap as well. And then obviously S&P 500. Yeah, they made a Russell Top 200 index now. There's a lot of. So it has these 50 plus another 150. So I can do it here. Look at this. Oh, that's 200 stocks now. It's messy, you got to filter them out. You can't, are you going to find trades? You see how many of them here? You just got to filter it. Um, Go back to 50. It's just plenty. I just, that's what I mostly trade, these stocks. It's 50 index. Everything is here, healthcare, all the top companies. Meta is making a way up. Oracle making them. Oracle, I think, but I believe they have earnings coming up next week. Google here. Amazon forming a hook back up. JPM Tokos. Okay, I have stocks of all these 50 here. Okay.
Mo, did you already close your Lily trade?
Which one?
Lily, do you
Yeah.
already,
Yeah,
you don't have
Lily.
open position for Lily, right?
The what?
You don't have open position for Lily.
No, no, we booked. No, we booked.
Already
I
closed then.
yeah, I closed partial once, and then I took the full off on what's this? On Tuesday. Yeah, so on Tuesday, I right there, Tuesday, June 3rd, booking final profit 15.55. Yeah, I closed the first one we closed here from 11.75 to yeah, first I trimmed first one at 13.83, and then the other one I closed at 15.55. So this is a tough. This is S&P 100 index. Okay. On. Okay. Um, this one right here is the distance. What you're trying to calculate right now is the distance from the center of the benchmark. The benchmark is S&P 500, right? So all these stocks, they are circling around the benchmark, right? That's where we have weakening, lagging, improving, and leading. So by distance on the 10th decile, meaning that these are the stocks that are the further away from the benchmark. Okay. And further the stock is away from the benchmark, more alpha you're going to find. So meaning that the stock is going to take a much wider rotation to the downside, and the stock is going to take a much bigger hit to the downside. Okay, that's the same thing. This is what's happening right now with Tesla. See how far away it is compared to all these other stocks and sitting in the 10th decile. So the Tesla hit that just happened this week is RRG is literally confirming that momentum for you is that's what happened. Well, we cannot nobody can predict the cat and mouse fight, but it's just what it shows, NVIDIA is here. There. So these are the ones in a 10 decile. So 10 decile right there, then swings are directions. You can look for directions here. You can see where the stock is right now. See Tesla weakening quadrant, which is right there. In the weakening quadrant, swing is still up. Okay, it's in a 7 swing right now. It has a go signal triggered yesterday, as a was a matter of fact. So we'll see what happens with that. This is it's some of them are really good. I mean, some of them just lags because, I have them for free. I don't, it's sort of, um, go no go signal, you can purchase them on a monthly basis if you want to use those signals. I just had them free as a courtesy and just to I just kind of compare mine and just kind of see how they work. Some of them are really good. Again, there's no such not every signal is gonna be perfect, but you never know. So these are the ones in a 10 decile. So I will this is an excellent way to find alpha. This is a ninth decile. So that includes your Apple, Intel is here. This one is still going down here. So it's the best way to look at like how I filter is to see if I could find something in 8, 9, and 10 decile. Which you see it gives you right there exact what the distance is away from the benchmark. You see they all away from the benchmark. So when the stock does make a move, as long as the swing is up, I mean, if the direction is up and if you had you know, um, something in an 8, 9, or 10 decile, yes, best way to find alpha, buy some like 2 months worth of time. Let the trade play out. If the direction of this, so what you're looking for is momentum, alpha, and the direction of the swing. The direction of the swing is up. Well, you have a pretty good chance that the stock can make a move up to to the upside. All you gotta do is just wait for it. So we have Charter, this was a Duke, Oracle. The Oracle is rotating back here. I believe they have earnings coming next week. I gotta look. Disney, um, back here. See, it's weakening, so there's nothing to really buy here because it's already weakening. Intel, XOM. This is, I don't, energy is, I'm watching this. I looked at them yesterday as well. I had them on the other, on my chart, but it's just so narrow range here. I'm just really looking to see if this is just so gonna be so tough to fight this. You see this dip right there, and you see what happens here? Energy is just not. Every administration is punish energy and this pharma stocks. You know, every administration. These are just very challenging kind of. They make a lot of money, but at the same time, they're under the radar all the time. It's just he just wants to keep energy prices down because higher the energy, then inflation spikes and this and that. But it's very narrow swing. Mark, somebody was asking me yesterday as well. I like that stock. I've traded it a few times. We did some trades. It's kind of he's already made his way up here from see it's just not a very high ATR play. You're gonna have to sit on this freaking trade for a long time. It doesn't move much. It's a very low ATR play. And you see, you got a stock that is moves like coins. I'm not a not a very big fan of trading those stocks, to be honest. Apple's fine. So this is in a ninth, and then this is we can go at 10. I want to minimize the. It's okay. So I have to click on this bar. Now it's gonna select only these stocks. You see, like everything is pretty much out. So you don't have, except for this target is the one that is trying to see. It's not about is I know a lot of you guys don't have that, but it's not about just to see like what is pointing here. You need a strong chart as well, you know? I mean, yeah, it has to make a move up. It can. It definitely can. As long as the momentum is here, yeah, of course it can. 103. Yeah, there you go. Target might be a play. See if we can break out this swing high to target this against this. That's the trade. See, I just grab few things from the top right there, what I need, and that's this is where I save my time all day. I can See the price, everything here. I don't now. I gotta sit here and label this thing as a one, as a two, as a diagonal, as this. Who cares? We'll make it. We'll make it when we have time. Just gotta keep moving. I gotta, I have to find trades. That just it takes time, and I want to just don't want to sit and do any kind of a charting in the middle of a trading session. Filter, I have a very powerful scanner. Scan, filter the stocks, see what looks good, find here, go to the swing, direction is up, take a shot. Boom. That's it. But you can't rush, but you just have to find, well, ways to see which one has the better odds. All about probability. See, nothing here is a lot of them are rotated back in. Seventh is fine. You can do seven. Got a FedEx here, Boeing, this. I took a shot. I don't know. I mean, I can take another one. The McDonald's, I cut that one. See, it didn't really do much. I had McDonald trade. I just cut it out because the swing turned down. I believe it's still down. Let me see. Yeah, it's down. Yeah, once it's down, it goes down. That's it. It's gonna stay down for a while before it goes right back up. It's like, no. That's why this, you see, it's turning right back down again because the swing direction turned down. It's in a very narrow range. This is it's a beautiful move to the upside. Three wave correction here, 2, 3. It's just it's circling around this 317 mark. I don't know what it look like this. Some sort of a triangle. A, B, C, D, E. Looks like some sort of triangle here on a bigger time frame. Yeah, 3, 3, 3, 3. Yeah, can do that. Yeah, this is going right back down here. Then it's gonna make another way up. Then we can hunt for one. Not right now. Amgen is good. Sixth, so they're all everywhere. This is not that you're trying to find something that is going right back up. This is where all you're looking for is the distance. So you just filter these stocks, which is much better just to because it changing and it updates every day and which one move from fifth to sixth or seventh to ninth or tenth, and just that's the best way to even look for stocks to see if we can find alpha. Um, Tesla had a rough week, settling at 300. This is a higher time frame, much higher time frame. Um, I mean, if you look at this stock, it is a crazy volatile stock, which we all know that. It's always been and always will. Okay. It will never gonna change. This stock has zero fundamental. It's all news driven stock. Okay. Making cars and this, and you have a 40% decline in sales. Okay, so screw your cars. What's the point? Nobody's buying them. Okay. The problem in the business is this, okay? You could have the best product in the world, okay? Nobody's gonna make, well, the people, the companies has to make the best product to sell it to their customers, right? So Tesla can be the best cars, can get all the awards of being the one of the safest cars and this and this and this, but you have a 40% decline in sales, means that nobody's buying. There's nothing wrong with your product. Something is wrong with your management. Okay. The product a lot of time will sell on its own by its own reputation. You don't have to sell a product. And once the brand has an image, it will sell on its own. Management is what destroys most of these companies with their poor lack of decisions and their the show. Tesla has management problem, doesn't have a product problem. This stock is.
Mo, Mo,
Mm,
can I interrupt you for a second? I was looking at Tesla's monthly chart, and it looks like it's repeating the same pattern.
yeah, I mean, look, weekly.
Because I think that the past rally, the bromance rally, I call it,
Yeah,
it was nothing to do with any fundamentals at all.
correct.
It was just because of the bromance, you
Exactly.
know, between Elon and Trump, and that is gone.
Correct.
So I was looking at the monthly chart. Can we really be bullish about Tesla?
It's been a range bound stock. Technically, if you ask me, I can just paint you a technical picture, okay? Here is October lows. Sorry, the one he sold Twitter, right? Here's a low of 101. Here you have a swing of 193%. You have a decline here of 53%, okay? You have a higher high here, which is the all-time high. Here you have a higher low. Technically, okay, but just looking at the price, put fundamentals, his BS on one side. It is a bullish looking chart. Okay. You have a stock that is making higher low and higher high. Now the question is here is this that this drop and this drop, okay, is pretty similar as you can see 56 against 53, 193 against 251. You see how, you know, so the upside is definitely there. Now the question is to me, I'm trying. It's very difficult, getting very difficult for me to label this damn thing. I can make a case here for a sort of a cup and handle. Okay, call it that. Um, if this is looks like a rounding bottom that it went up slightly and backed off, failed. If it is trying to form a handle here in the coming weeks, your handle, you need volume. Okay. Volume is very important. It's the same thing as when you have a head and shoulder pattern. Okay. Something like this, right? So you have a head here, you have two shoulders. So this shoulder, one of the shoulder, you need a bit of a spike in volume as well for this thing to play out like this. I'm just making a bearish case. So if you have I don't think this would be better like this, but it doesn't matter. So if this is that, I don't know. I mean, it's going to take a long time though, because these are just the weekly bar, you know? But here's the low. Let's focus on this for now. This is the high. So this dip that we just had, just right to this 272.87, which is 61.8. Okay. And we're right there to this 295, 300 mark. So now if we let's say, screw this. We don't want this. Let's go back and focus on this price action. So what are we going to do? So we can just simply now draw a trend line. There you go. Okay. And what we can do here, we can draw a trend line from this low to this low. Now you're going to bet, okay, which way the stock is going to break from here. All right. Now you want to make the case of Copenhagen and this and this and this. Fine, we can do all this. Okay. But we'll watch in the coming weeks. Is this range is where to see what happens. Okay. To me, what it looks like, the Tesla's trying to go into a pretty tight range in the coming days and weeks because you had two of the most the largest two of the largest percentage decline, okay, side by side, meaning that you one here and one here. So you just take this one, take these lows, and then you just connect it from the all-time high to this low that we just failed. Mean no, where the price backed off. So Tesla's swing is up. Okay. So now is what it is. Let me change this thing to a candle so I can see a little better. There. So now if you notice, Tesla put a low here. 1, 2, 3, 4, 5, 6, 7. For 7 weeks, this stock was making higher highs every single week. After this drawdown, this week, with this cat and mouse fight, it put a one lower weekly bar. That one lower weekly bar put a low right at that 61.8, and now it's at 295. Now, in order for weekly swing to turn down, you need 2 more weeks of lower bars. Okay, so we only had one so far. So the next week that we have coming up, okay, is it, can we gonna print a new lower bar? So lower bar meaning that we need to take out this low, which is this 272, to have 2 lower bars. That swing's direction will still stays up. The only time the swing direction will change, will turn. Let me do this. Manual stuff. Show you the actual swing. That calculates the exact percentage as well. So this is where it is. So you have one weekly bar now against 7. This is the thing about this stock, that once the stock is gonna find the bottom, one is run, it runs. Then there's no stopping back. Look, 1, 2, 3, 4, 5, like 5 weeks here. This was a lower bar. So you see, like once it runs, it runs. Look at this. 1, 2, 3, 4, 5. 5 weeks of full straight up. Like, look at this one. This is the outside bar. 1, 2, 3, 4, 5, 6, 7, 8. Finding bottom, yes, I picked it quite a bit of time. You all know that. But it takes this is a stock, okay, that it's gonna keep pull everyone to the downside. It's gonna give them a very big hope for a huge drawdown that's gonna pull the rug. It's gonna pull the rug for a straight 5 to 6 weeks in a row. It's a volatile stock. It's always going to be that way. It's just it's gonna yeah, it's just gonna test your nerves. And if you don't feel comfortable trading a volatile stock, don't trade it. We're gonna find plenty more other trades, but it's fun to trade for sure, you know. But it's just gonna keep everybody to like, oh, it's going down, it's going down, it's going down. It's just like, and then it stays down, it stays like this. Rip. So what is the plan here? The plan right there, from to me, what it looks like, this stock about to go into a pretty tight trading range. Okay. If this thing breaks, next downside is 247. Okay. The 247 is a 78.6 retracement of this swing low of 214 to 367. Now, can we get down? It is possible, or we just sits around here, go sideways, being up for 7 straight weeks, and then see if the price can make a move higher. Okay. So this is the downside. This is where we just had a bit of a pop yesterday, and we only have one down week. Direction is still up. Okay. This little green line right there still, it stays up, hasn't turned the line back to the downside. So that's what Tesla looks like. Now, if we go back here, now what will be the upside for next week to go back up and print a higher bar? We need to break this 355. Or we're most, to me, if I have to make a call for Tesla for next week, I think it's gonna have an inside week. That's what I think. I mean, I could be wrong. Like one of these black bars, you see right there, this one, this inside weeks. Inside weeks is just, you mark this high, 355, you mark this low, let's say, stays in between, just stays range bound. This decline off from this low and this, these are the 253 and 56% decline that we had. It's just when you connect this, it's just starting to give you a pretty tight trading range. Now, if you go back to, oops, I deleted that thing. If you go back here to the weekly, looks like a beast. It's gonna take time. Keep that in mind. I mean, it has a plenty of alpha. I mean, if I look at a weekly time frame, this is what I picked up a leap. I was like, it's gonna be, it's gonna be a good. I have plenty of time. I said the leap is gonna be totally fine. So, man, I don't want to give nobody any financial advice or whatever, but here's look. I know you all guys trade with me, okay? And the best way to buy a Tesla is to buy a 50-point spread wide. You can, meaning that every 50 points, okay, you can scale a position on this stock. It's gonna pay you no matter what. You either buy shares or you just open up an option leap after every 50 points. It has a pretty much guaranteed payout. What I mean by that is this. Let's say you buy at 300. Okay. You could do a long dated the leap. Okay. It doesn't, it really does, it's not gonna have no time decay anyways. Let's say you buy here 300 and position is open now. Now the position can come down, fine. You just have to wait. Next leg down, 250. And then 200. That's what you call a 50-point wide spread, right? 300, 250, 200. I don't know if it's going to come down that much, but anything can happen. Let's be open-minded. If you start a position here at 300, let's say you buy an option leap, buy like two of them. Depends how much delta that you want to carry. Let's say you want to carry a 20 delta trade. You adjust the spread, okay? You either make them in the money, buy like 300 and sell the 320 or a 325 or a 330, depends how much delta you want to carry. It all comes down to that because you're hardly going to have no time decay on a spread anyways. Because if you're going to go out almost a year out on a leap, no time decay. All you have to find out and see how you want to adjust your, how you're going to compound the delta. You have a, let's say I take a 20 delta trade at 300, sell like buy at 300 and sell like 330. Yeah, the debit is going to be almost like 16, 1700 bucks. Fine, no big deal. You're only carrying 20 delta anyways. Let the position work. If the position moves from here in the next several weeks, in 2 months, 3 months, you got almost a year. Go a year, even longer. Who cares? You only have 20 delta with no time decay. The premium is not costing you any time to hold them. The price goes up from here, you make money, obviously, right? Now, if the price comes back down here to 275, hold the trade. Don't do anything. You don't do anything until you hit a 50-point lower mark from the original entry. You just scale the entry with 50-point wide spread. You have, let's say you have two here, you can buy one or you can buy two more. You can just buy one more. What do you think your entry is going to be? Your entry is going to be right in the middle, right there. Now you sit in here. Now your entry is 275. Comes in the middle, right? Same thing here. If you do for a volatile stock like this, that could stay down for 4 weeks, 3 weeks, 30, it could take a pretty sharp dip. Like you see how similar these dips are, 32, 32, 34. And then you can catch a 50% move on this stock, but you just have to scale it that way. It's the only way to make money on Tesla. Long dated leaps and just break it down with 50-point wide spread because of the volatile stock. If you really want to press it too hard, you can do 25 because I wouldn't do 25 because the 25-point drop can happen in one single session. You know, you're just risking too much too quick. 50, let the trade breathe. Just wait for it. I just bought that leap that we just closed, make like what, a little over 800 bucks. That didn't play out? Of course it did. I had no worries about that trade. I was like, okay, fine, it's gonna stay down. I'll throw another one. So this run that we had, that we just bought somewhere around here, end up paying what? I risk like something like what, 800 bucks or so. Let me see. Yeah. Yeah. 850 bucks. It's like a what, 15 delta trade. Look at that theta. I was making $2 every single day. Even the fact the stock came down. But this what my point is, like a 50-point wide spread, if you scale this thing down in a 2 to 3 trades over time, it's literally a guaranteed payout. You're gonna make something. Worst case, you're gonna break out or like even get out of the trade. But you just need to wait for it. That's it. It's a volatile stock. It's gonna pay you one way or another. You cannot just, it's not gonna stay down for six straight months. If you're out for like year and a half, let's say, not even a year. That really doesn't matter because all you have to do on a spread is to play with this. I took I adjust this leap, I made it with the 15 delta trade. I'm giving you an example of 20. You can do 15. You just have to adjust. It's all it depends. Like you buying a call, let's say at the money at 300. Where do you want to sell it? The wider the spread is, so if you buying 300 call and then you selling one, okay, where do you want to sell? If you want to sell it as 270, so it just like wider the spread is, obviously more debit you pay. But the adjustments here with this, the call that you're gonna sell is what is gonna adjust your delta. This is what you need to be focused on because you're gonna be positive there regardless. You're not gonna lose any time holding those premiums for a year and a half or 1 year out or 12 months or 11 months out. That doesn't matter. You can do 9 months, you can do 11 months. As long as it's not costing you money to pay for the premiums, so that's fine. What do you need to work on? You just need to play with this. 1 point is gonna move, is gonna pay you $15. That's what you need to focus on. So what you're looking for is roughly a 50, 60 point move. You take a $15 times 60, that's $900. Over time, if the rip comes in Tesla, that usually comes, as we all know, that once it runs, it's gonna run. If you catch a 50-point move, if you're trying to scale 50 to the downside with the multiple positions, you can just target a 50-point move to the upside. That's your payout. I think it's a bad trade. It's the only way you're going to play this stock. There's no, because this stock, the reason why I'm saying, because I just bought one, the leap that I just did, just wait. You think it's not going to pay? Of course it will. I'll show you. I bought them at 298. Okay. That's what I paid. 298. Right here. Right here. 298. Next one, I'm going to scale down 50 point down. I'm going to add one more. My average will be right here in the middle. If the price will come down here, it can, it might not. What we're going to do from here is we're going to look for a 50-point move back to the upside in the coming weeks or months. Who cares? It's a lot of work. Stock can go up 10 points, 11 points, 12 points. I'm really dying to close the trade. I can. But that's not the point. Is I'm buying a plenty of time. It's not costing me any money to hold those premiums. Just let the upside work. Worst case is it's going to come down another 50-point drop. I'll buy one more. My average is going to be much better. So now from here, from 275, you can catch a 50-point move. Everything is not going to pay you. Of course it will. The reason why I'm giving you this advantage is because this entire mess is nothing but a sideways chop for years. Okay, so I did the math on this stock, and I says like if you scale 50-point entry on Tesla on all of these ranges from starting from here to here, every single one of those leaps will end up paying you something. Mark my words. All you have to adjust the just compound the delta. How much delta you want to carry? You want to aggressive with 25 per point? You can want to do 30, 40, 50. I don't know what your risk tolerance is. You just need to catch a 50-point move. Your payout is there on a trade. That's not costing you any time decay. You can go out a year and a half out on time. Who cares? I went out like what? 20. What did I do? Here. On March 20, yeah, 26 next year. So I have what? So what do we have? Second. So we have third. So we have three, four. Sorry. Are we in a second quarter? Yeah, second quarter. So we have a third quarter, fourth quarter, fifth quarter. So yeah, fourth, sorry, fourth and per year. So we're 3 quarters out. 3 quarters. The 300, 350. I did a 50 point. That's exactly what I'm telling you. To to make a 50 point and to scale a 50 point down. I don't have no problem um um paying this 17, 1800 bucks. It doesn't, what difference does it make? I can pay $2,400 for it. It all depends on delta. If my delta is 15, stock drops 1 point, I'm gonna lose 15 bucks. And I have no time decay against me. So I'm just only playing exact what the point move is. The stock drops 5 points. Yeah, 15 times five. That's my, paper loss. I have 3 quarters for this thing to play out. You just you just have to wait. That's all it is. It's just a waiting time. And then the rest of the world is, oh, it's going here, no, it's down here, no, it's going down to one. That's just complete nonsense. It's $1 trillion freaking market cap company. You think it's going to go down to zero? You know, the news-driven stock, crazy CEO, just this company has no fundamental. Yeah, they're just he's selling everyone on the future. Okay, Optimus is coming, all the robo taxis is coming, and this and this and this, and then at the one when it launches, nobody buys it. That's what I'm saying. It's just like he needs to. He's a smart man. I'm not gonna say anything. He's not an idiot. He's a smart man. He just needs to get off from his drugs, and because he's cooked. Too much noise on this stock, but it's fun to trade. I'll take it. So let's see what the next 50-point move plays out for what am I at risk on this one? 1765. With 1765 on a 50-point move, if I can make another 800, it's seven, yeah, sorry, the 850 bucks, perfect. Then I'll roll another one. Just keep doing it. If you want to double the risk, you can make a 1650 bucks, triple it. It all depends how many deltas you want to get. How many deltas you want to carry in a trade. It all comes down to that. Your payout is based on your delta. That's why you need to learn how to compound the delta on the option trades. It's not about the cost of the trade. That, oh, I'm paying 1,800 bucks. Well, I trade $2,700 worth of contracts on S&P all the time. But that gives me almost 5 deltas. But I'm paying $2,700 for it. Well, of course I will because I'm trading a index, which is 6,000 price at the moment. So the premiums are not gonna be cheap. Well, if I'm trying to buy something for 295 versus I'm trying to scale a position on a $6,000 price. You see the difference? So how can you even compare a cost? It's going to be what, 10 times more, five times, whatever that depends how you adjust it. It's all up to me. Option trading is all about how many deltas that I carry on a trade. I, I always try to reduce as much as possible the time decay. That's our biggest enemy is the time. The passage of time is especially when the stock's trying to go sideways. It's just what it kills you. Just the loss on the option is not the direction that you pick. Is when you get chewed on time. It's just that's the painful loss. On the option is just because you're trying to scale an entry for X amount of time. That's like this is the time that I'm buying. This is what I'm buying. And this is what I want price to get there by this time, right? But if it doesn't get there and the stock's stuck, well, now you're not going anywhere. You're not moving either. Look at Apple. It's just been sideways. You know, I mean, it's not a broken company. It's not nothing wrong with that company. It's just circling around the same exact thing what Microsoft did. But you cannot go wrong owning Apple, that's for sure. Um, Daily chart doesn't really matter. It's the same thing. The focus is on this swing from here now. That's it. So we're just gonna look at the run here. One, two, three, four, five, six straight days. Seven back. You see, that's the thing about this volatile stocks. Once it runs, it runs. Look at this. One, two, three, four, five. 5 days straight. 32% upside. Look at this. 34 upside, 32 upside, 35 upside. It's all straight up. Look at this. Hardly backs. That's the thing about this stock. It's just gonna catch everyone to the downside and just do the rug pull. It's gonna just wipe off all those puts. All the volatile stocks are always like this. They're gonna pull all the sellers and one to the downside, pull the rug. So we'll see what happens. And a lot of support here. So this is the daily chart. Daily swing is up. The go signal triggers here yesterday, okay, which we can change this just to, again, this is only, signals are only probability. Last time it triggered here, it worked out really good. This one triggered yesterday. So we'll see what happens. Okay, we'll keep an eye on it. If the indicator signal can come handy, that can give a bit of a relief in the next coming days, yeah, it's possible. Anything can happen. Okay, but this one triggered yesterday, so we'll see what happens. Okay, this is the low. Um, we're gonna do, so if we go back here to the swing count, weekly is up. Remember, 7 weeks up, we have one down week. Tesla on a daily time frame swing is up. Why? Because we don't have three down bars. We had two here, pop, two here. This still is an inside day yesterday. I knew it was going to be inside day because there's such a huge decline here. So like this price just gonna take a bit of a breather. So we'll see what happens. Here's your support right there. That's your zone. You're going to watch right there. This swing high, this swing high, dry little box right there. This is supposed support. Next support down, this and this. Okay. What's your next support down? This and this. Just fine. I don't care. I'm not buying anything until I see I don't need to increase risk. I'm not, I have plenty of put until 248. Why you think I'm going to buy 248? Because 247 is a 78.6 retracement. Remember? That's why I want to pick that entry at 298. Because my next entry on that stock, if the price will get down there to test the 78.6, I'm going to add one more leap. Because 247, I was waiting for that 298 print to come because the dip was coming. It came all the way back here, which is fine. And I was like, that's fine. Got plenty of time. And the 247 is at 78.6, which we can do it here. 249, right there. This is a 61.8. 78.6 is at 249. So this will be another one. We'll put us right here in the middle. That's it. We'll wait. Stock from here managed to pop right back to 275 when he break even on my trade. Okay. And from 275, it managed to climb back up to 300. I made 25 points. I'm still going to make money. You just scale this stock if you are a buyer of a Tesla of a 50-point widespread. Watch is going to pay you one way. I did the math on this whole thing in the last couple of days just to figure out this job, how to make money in Tesla. And I tested this one with the previous trade that I closed. And I'm going to do another one. I just did another one. So I'm going to scale this thing down again with a 50-point widespread and see how it plays out. Nothing in between, though. If the price comes down back here, I care less. No, absolutely. Just leave the way it is. Like you see the price at 295 comes down to 280, 285, 270. Who cares? Just leave the way it is. Do not do anything to the trade. If the position is down, this position is down. It's a paper loss. Nothing's going to happen. Your official loss is when you actually close the trade. Position is down, it's down, it's okay. Okay, so focus on that 50-point widespread on Tesla. Watch how it's going to work out. You can do it on Monday starting here from 295 if you want to. But if you already have a trade open with me, then you don't have to do anything. Just leave the way it is. You have to control risk as well. You can't just rush and just, oh, I want to buy this because this is not how trading works. Some of the level, like some of the 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 price is going to come back down. You see all these previous swing highs that you see right there is always going to act as a pretty strong support. Always remember that. You have to look at this way. This is the low. This is the actual high, right? So yeah, it ended up making a new it ended up making a new low. What happens here when the price finally went back here to the same price? Look, backed off. It's right in front of you. This is your resistance. You put a new low here. So if the price is going to come right back here to the previous swing high, what do you think is going to happen? It's going to act as a resistance. You need to break this to make room to the upside. There's a lot of there's a pretty good chance that you're going to back off. And then from here, you finally made price finally managed to break this. And that's how much room it made back to the upside. And now what do you think is going to happen now on the way down? The same area for this 290, 294 is going to act as a support. This gives, because the sell-off was so sharp, it even closed below this 200 EMA as well. The 200 EMA on this stock is sitting at where? Right there, 295. You see, 291, 294. I think there's a weave up sitting here as well off the low. There you go. 292. That's a weave up from the low of this 214. There's some serious support sitting here. This is a false break. I just totally see, because it was such a huge flush down to the downside. There's some serious support sitting here for Tesla to hold. Weave up, 200 EMA, previous swing highs. Swing is up. So we'll see what happens. Worst case is this will be the only stock I believe in a Mag 7 is going to be down uh, below the 200 if it start coming back down again. The rest of the Mag 7 were all up, which we can see it here. Have it here. Has exact print right there of 200. Tesla is at 295 EMA, it's trading at 295. Nvidia 200 at 120, trading at 141. Netflix 200 at 929, trading at 1241. Microsoft 416, trading at 470. Meta 584, trading at 697. Mags EMA 4851, trading at 52. Google 168, trading at 173. That's pretty close to it. That's why this pretty Google is fighting. Amazon 198, trading at 213. Apple 216, trading at 203. Apple is the only stock right now that is trading below 200 EMA. And Tesla is at the 200 EMA. It's right there, exact print. How many? I'm going to change this thing. I guess it made. I don't know why did I do this. How much percentage exactly you are from the 200 EMA? You're at 0.13%. You're off by 5% here. Up 7%, 3, 8, 19, 13, 33. See, it gives you exact percentage how much you're off from the 200. This is the 52 weeks high. It's a very good. You got to pay attention to this one every time I show you. I show you this thing every single day. You know that. Pay good attention to these numbers because they're changing every day. So this is 52 weeks high of the stock, 52 weeks low. This is the midpoint. You should always be watching. Okay? Watch this print. When the stock is going to make a 52 weeks high, or when the stock is going to make a 52 weeks low, the mean reversion, okay, will get the price back to that midpoint. This is what the midpoint is. So always pay attention to this one. There basically depends where the price is at, but these are a very good targets for you to consider on a stock. If the price rolls over, or if the price is already low at the bottom and is going to make a move back to the upside. Your Apple right now is 214. Watch this 214 print. It's going to come into a play. How soon? Well, I don't know that. But I see this, that it's 203. Apple needs to break 207-ish. The 214 is this. Watch this print. Because when I'm watching rotation, whatever it takes my eyes, I have this number memorized, kind of, okay, what is my midpoint? if the price does manage to recover, gets out of the lagging quadrant, what will be my mean reversion trade for the print that I'm going to be looking at? This is going to be out of the money strike anyways because the price is trading at 203. Imagine if you hit this out of the money, how much the payout you're going to be. It all depends on the time frame, you know. So from here, let's say you make a 205, 215 call spread on Apple and just leave it. So whatever the mean reversion that the Apple will make, and if it's starting to improve from here, if you have enough alpha, you can see the momentum here. Stock is pretty far away from the benchmark, so it might catch a, there's some things gonna happen to Apple in coming days. So watch this and look everything where everything else is and look what Apple is trading. Apple is not getting any love from Wall Street this year for sure. It's just the standalone beast. That's what you can say it. Just literally ignore it all because pretty much Apple over time always trades next to Microsoft. Microsoft, Apple, they're pretty much same along with QQQ. But if you look at a relative strength between them, is just they're like completely different looking stocks now. Let's do here. You compare Apple, Microsoft with QQQ. There you go. So you can do what am I gonna do? Let's do this year, January 1st. Then we can do January 1st on this one. We can do January 1st on this one. See? Look where Apple is compared to Q's and Microsoft. And if you look here, I mean, we can do this as I only did for this year. Look how they were holding hands before. I know, like, if you, I gotta change the time frame. If you go back and look at I can do a relative comparison. See if you go back here to 5 years. So Microsoft is definitely a much better bet than Apple. Okay, you just compare last 10 years. We can do 5 years. See? But the point is like look how Microsoft has a very strong correlation with Qs. Okay. Apple is just starting to not as much. You see like all the green and the blue ones. This is the last year, last quarter. You can change all this monthly, whatever, weekly you want to do. So year to date. So Microsoft, of course, the stock is at all-time high now. Q's is near the all-time high, which is right there. 5.4 ratio right there. I don't think anybody has ever gone wrong owning Apple. They just next earnings, they is probably gonna announce another buyback and raise the dividend. Just just trading a country, not a stock, like a country with its own GDP. Crazy. Um, Bitcoin is good, but oh, the swing is down on a Bitcoin. Got a buy signal here the other day, so it's trying to kind of sold off on the other day. Kind of noticed, and I was like, wait a second, I mean, I got these two zones here. This swing low, build this one, this high right there, because that's where it took a big, huge dip to the downside. This 99,490. I was like, worst case is gonna come down to 100, 100,476. That's where this buy signal triggered here, just like the previous one. This one here, this one here, this. Those are the little tiny ones that they failed. And these two are okay. 9.3 on this one, 28.86 on this swing before it backs off. So we'll see. This one trigger right there of this on this bar. So now we got inside day, and then we got two more. We need one more bar for the swing to turn back up, and then to see if it can make a room back to the upside. That would be nice. So that's the story on Bitcoin. This is you had such a huge upside. It just looks like a nice bullish. That's a false break here. Because if you connect, I originally had this like this. I was like, from here, we should go like this. But as you fake out here to the bottom, now it's reversing. It's flushing, it just because you have such any like when you have this kind of an upside on any stock, and then all of a sudden you come across something like this, yeah, it has a very good chance the stock can make a pushback to the upside. But then this one, it just flushes you out, and then you see it rips right back up. We'll see what happens. What else? On broke out the downtrend, worst head and shoulders. These are the worst days are over. This is a semi stock? Yeah, over. And nice uptrend stock for sure. A pretty bit of a beating here. Yeah, five-way move. You can make a five-way move. One, two, three, four, five, four, five. Yeah. Here, look for a bit of a pullback here. Let's see what the swing shows. Do this. Nothing in the bottom. Oh boy. Yeah, let's wait for a bit of a pullback now. That took a long time. Oh, look at upside down doji yesterday at the close. Yeah, let's see. The swing is up. You due for a bit for a pullback. Okay, let's find. We can scale an entry here. You see 46, 46, 46. There's going to be a strong support here. 50. That's a 4 point gap. 4 point to the downside. How much is stock? How much of the stock moves? I want to go that percent. That's 45. Throw a weave up. Oh, it's in a six swing right now. The count is six. Any go, no go? There's one here. Oh, damn, how many of them have failed? See if the weekly looks like. Oh, weekly swing is up as well. It's not bad. I mean, just if you hang on, let me check that. See if we can consider buying. Oh boy, daily rotation is very strong. Oh yeah, there you go. Nice. Yeah, see if weekly swing is up. Rotation looks pretty badass on this one. Let's see. I mean, I don't even know this. On the ticker is on. It's like a switch on and off. Let's see. That's a very sharp weekly bar. Huge. The stock has taken a serious beating to the downside, down 61%. It's gonna take it's gonna take a time. You're not reversing this kind of a dip anytime soon, that quick. Oh, this one is 68.5. So very close. Okay, let me see. So you take this to this. Okay. How long it took last time for when you took a 68% dip to reverse right back up to 29 weeks. 29 weeks. Can you make a case thinking that same 29 weeks off of the low, if this low holds, which has the very similar 60% drop from peak to trough, that will take a minimum 29 weeks to reach back to 111. Okay. So that date would be October 31st of 2025. That will complete 29 bars on a weekly time frame is to see if the price can make a move back up which is the last, what is that, June, July, August, September, October, next 4 months or so. I mean, anything can happen, but you just to calculate two time because a lot of time because it had like you can actually nail a lot of time, but depends. Like, I don't know what you're trying to do, short term, long term, whatever. Just gonna give you an idea. Like last time it took 29 weeks to for the stock to recover 60% dip. Now this time, just to calculate time from here, let's see. Ah, the stock is a lower yearly bar. You see, that's gonna because you have 6 more months to go. This stock is gonna have a crazy resistance here at 59.61. That's the previous 2 year low. 50, I mean, if you ask me what to make out of it on a down yearly bar, that's it. 59 to 67. That would be my call for now. It's just too damn tough to fight the lower bar. I know that. So you're basically looking for this entire candle to shrink, meaning that the body just literally disappears. To get to, if the price gets from 50 to 59.60, so you're gonna have only this much body left on this from this high. Yeah, if I was 50, that's it for now. Okay. All right. Anything else? Yeah, it's tough to fight a yearly down bar. Notice that. Here's a ranking I just made. It's a pretty good one. I'm in a ranking mode these days. I put a lot. Ranking is like you put a lot of conditions. Okay. A lot of conditions, which meaning that if it's trailing above a certain moving average and this and all those ranking conditions are true, that gives you, they can just build your own ranking now. Like this one right there is basically a script. This is an S&P 500 weekly. Okay. So what does it tells you here is the price trading above the 50 at the based on the close? Yes. Is the 13 EMA sloping up? Yes. 33 and 88 EMA, the moving average is trailing up? Yes. Is it above RSI 10? Yes. Positive return over the last 3 months? Calculate return as well. So now you combine the variables 1, 2, 3, 4, 5. So you put 5 variables, okay, all together. When everything gets true, which meaning the statement is true, it creates a ranking. So the ranking goes up to 5 because we have 5 variables. V1, 2, 3, 4, 5. Now we have 5. So one of them was going to fail. You see the ranking drops back to 4. So one of so basically one of the 50-day moving, 50 moving average or 13 or, one of these conditions will become false. The ranking drops. It's a really good way to put multiple conditions on a chart to see if the price is trending, to the upside, and you have the ranking numbers that tells you, because all the variables, that is the uptrend is in play. Same thing with the downtrend. You see, like from here, when everything, the ranking comes back up to zero, you see right there? You see right there? 27.54, like when everything goes back to zero. So all the conditions that you did for a 13, 88, 50, RSI, 3 months return, everything is there. You can put anything in, right? And all you're doing is just trying to put variables, right? Is to see when all of them becomes false, ranking goes back to zero. That's it, from zero, and then it's gonna work its way up. When it goes to five, it just stays at five. The next number is gonna be down, is gonna be a four. So it's a pretty good way of um, put conditions on a chart. It's same. This is the ranking is for the swing counts, which I usually use them here, which I use them here all day, right there. This works with the 3 bar swings. So we have three, two is a pullback, and you can go back to three. Goes back to zero, and it turns red. See? From here is green, right? Zero. So it goes to zero. So this hour, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 11 hours, 11 trading hours, because you only have 6 bars for the each day. So for 11 hours, this ranking was pretty much zero. And then from red, it turns into blue. Blue, it goes up to, if the ranking goes up to 3. So this just, it changes with the direction of the bar for the swings. It's very helpful. Meta. Now you're gonna make me do Elliott wave. Looks good. So okay, let's do this. Okay, so we have 1, 2, up in 3, 4, 5. Looks like it's an extended fifth wave. 5, 3 versus 1 was a little bit shy of 376 and a 662. 3 wave decline. And then you have 1, 2, 3. There's going to be some sort of a fourth wave is coming. Just to see it gets one final push if this 3 kind of extends more, because right now it's just sitting at 200. The 200% is right at 696, which is close to 700. Now the 3 can push to the 717 if it makes a little bit more upside. It's going to make some room for this 4 to breathe. So we'll see where this third ends. Okay. So this fourth, your invalidation is here. Support is here. This is your upside. Oops. 5 versus 1 is here, which is 7, all-time high 740. I mean, you can make his room. It's what, 42 points away from. This is like a QQQ. I mean, if we can add an overlay. I don't even remember doing this. Motivate is really good. It has a lot of stuff. I don't even use them anymore. Oh, where is my, God, I forgot how to. They have a lot of stuff. It's a very advanced choppiness index. They have some other stuff they don't even have. I mean, Optima is different. It's just very I mean, it all depends. Like you see, like what works with your trading style. So just took all this stuff. I don't even know what the hell is that. It's just damn one price, you know? It just look at this. It's just a volume based. See accumulation distribution line. Look at this. I don't I don't know how many years I have Motivate. Uh, all these kind of a different moving averages, instruments. They have a strategies here and stuff you can do. It's a 3 bar inside strategy. You can, it's just you have to sit and there you go. That's your, see, it tells you where to enter long, where to enter short. Look, long here. I mean, not everyone is gonna, but this is a 1 hour. You need to, these kind of us, this stuff works good on a bigger time frame. 1 day. Here, see, so it's false. Look, short. Look where the price is going. Look at this one. Short. Yeah, just you can't rely on these things, right? You got to be very careful. Yeah, some of them they're definitely going to nail them pretty good, but it doesn't even have any buy signal for Meta and be only based on this one. I mean, if I don't do any of these 3 bar inside bar because they're looking okay. He's looking for a double inside bar strategy. Most of them they do break higher though. This is another way of yeah, this is I don't know, but this is good. This is go here 2 hours. Is it near this 200 here? If this is gonna come into a play one way or another, we can make a little bit more room here for this third kind of breathe. Make a little bit more room for this fourth to come into a play. And then from here, you can just pair this to see if it can make a push back to the 725, 740, 760. So what meta is. I mean, if you want to go back to a recent peak to trough decline, you just want to look at 127 extension, it's at 833. That's after breaking 740. 161.8, 200 go way up. So, okay. Yeah, I was trying to find this scan for this. When you have two inside weeks, let's do it on 500. I think it's not going to freeze up on me. And then we're going to go. Where is the, yeah, 500 1 week. What are we going to do? We're going to run a scan. Oh boy, it's going to freeze up now. I knew it, knew it, knew it, knew it. I'll run a couple scans. Yeah, stop. I like this data, but I hate them at the same time. This IQ feed. Okay, I knew it. Because you're running you're on a massive scan. So I wouldn't do it's gonna do okay. No wave count. I'm not sure yet. I don't know. I like to make a case of a 1-2, something like this. Um, that's the only way you can do this, make this thing work. The only problem, not problems, people try to tell me about diagonals. The only issue that you have here by making a diagonal is this fifth wave is 8 points bigger than 100%, which is compared to three. I mean, a fifth wave normally overshoot. I know that. I mean, this is 8 points. Diagonals can never be a perfect because they're just it's a very huge debate about diagonals in the Elliott world, you know. Um, there's few points can throw you off. I mean, and then at the same time, you can seriously miss out on a massive move. Look what happens here. Here's NVIDIA low, 8662. So here's 1, 2, 3, 4, 5. I have them as a 5 waves up. Now this third wave, okay, is at 105, is shorter by 5 points to at least 110. But I was like, okay, fine. It has a throwover. Let's do this 5 because I was looking at the swing. So like, okay, I had a swing here. This is down in two. And then from down in two from here, I was like, we're pushing out of this channel. So like we're gonna have to make a mean reversion back inside the channel. So anyhow, we did. So look how much upside you have. Now, if you just simply sit here and thinking like, oh, I don't consider or call this a diagonal because it is off by 5 points, but that actually giving you an eight swing move, one five here and three here, that makes eight swings, and you breaking this high right there, 115. So you just like being stubborn, sitting with your thinking like, oh no, I don't want to take a trade because it doesn't meet the rule of three being that short and a diagonal. You see, my point is, Elliott is few points can literally throw you off. The reason why I'm telling you this because I've traded currencies for 8 years. Okay, that's a long time. When I was trading euros has they call pips. It's a word they use pips. So meaning $1.15, right? Exchange rate is $1.15 against the dollar. The pips is more volatile. So a lot of people they do a lot of Elliott on Forex market, and there's a lot of time. Like this is I'm talking, talking to myself. Like I'm telling you from my experience as well. You have wave one here, you have wave two here, and you had a third, and you had a fourth, and you're looking for this fifth wave. And invalidation here for this is at 112. So the price comes back down here. Now, how many times that the price comes back down here, it makes 1.11 and 1.110. It will make this because Forex market is volatile. And you had invalidation here for this wave 4 at 112, and you come down at 111, 110, you spike right back up. How many times you've put such a tight stop loss and it's going to stop you out. 3, 4 days later, you're right back up in a fifth wave. It happens a lot in the Forex market. The best way to look at all this, you have to, every time when a price comes, okay, close to your invalidation mark, you always look at a closing price. It happens, okay? So just change. How do you know the closing price? You have to go to a line chart. You'd get out of these bars and you just go back to this line. Well, I'm a line chart right there. Uh, Here, the line chart. Now, these line charts are based on a closing price. So if the closing price has not invalidated your wave count, if you come really close to it, you know, it's you see right here, look at this. So if you look at the line chart, there's not even a 4 here. Look at one, like call it like one line here, down here, and straight up. Where's 4? I might, as a matter of fact, put this thing down, start the wave count from here, not from here. It's not even a right way to do it. It's just some sort of a um, the low is actually here, not here. I would, it doesn't make any sense based on a line chart and this, because this doesn't, to me, if I have to say like, well, Bob Proctor wrote this thing with Frost back in 70s, 80s, early 80s, the diagonal of wave 3 cannot be the shortest wave, according to him. Ralph Nelson Elliott back in the 30s has never mentioned any diagonals. There is none. So they did all the research, came up to the, because this is when the market starting to form these diagonal and stuff, because 30s, everything was handwritten paper stuff. So that's how he set the rules on it. And how many times that I've seen Elliott Wave International, their own wave count on their own Twitter page, they don't even follow their own rules. It's embarrassing, to be honest. It's just, I don't think, I know that, okay, Elliott has a hard rule that, yeah, fourth wave cannot enter below the wave 1 low, right? Which is fine. We all know that. But when it comes to a diagonal, there's never going to be a perfect diagonal. I mean, I can make it as best as I can, but you're just going to be off by a few points. Look what happens here. And look how much upside you just lost because you don't have a proper right wave count that follows every single rule. So if you want to be a policeman, that's different. If you want to make a bit of a conception, saying like, okay, fine, I can see what happens, and if the price does manage to make a move higher, then I'll just go with that. This is why instead of me relying on this all the time, I'm more focused on swings because swings gives me the confirmation, and then I'll adjust the wave count because all I have to do, I just have to make sure that wave count just have the right look. I mean, it's okay. I can live with that. I mean, but just look how much upside you 51% from this higher low swing after 5 and 3 down, which is near the 61.8. But you just being a stubborn or being stuck with like, oh no, the 3 is shorter than 5. I even had a one guy try to tell me on Twitter. It's like, dude, relax. I went back on his page I was like, I didn't say anything to him. I was like, dude, you don't see a five-way move? Every three-way move he labels as a five-way move. I was like, where's your fourth wave? Uh, I never break a rule. I was like, the guy who wrote the book is breaking rules on his own page. It's not that few points. I don't think it's gonna make a big. It makes a really that big of a difference as long as you can. You need eight swings off the low. That's how. That's the only way. Whatever stock that you trying to trade, you have your eyes on that you wanted to buy. You just need to look for eight swings, like the way I just did here. We just had a perfect. That's how you guys all learn this Chipotle. Just that's it. That's what you need. You need to count five up. Then you need to count three down. A three can be down here, whatever it settles. Then what you're looking for is price to make a higher high. Low, high, higher low, looking for a higher high to break this high. That's it. That's your trade. Because what happens here is you have five here, three here. You want to catch that third wave. That's the money wave right there. This chop right there, three up, three down, three up, three down, three up, three. This right there, it's a nightmare to trade. And this lasted from where? April all the way until when? May 14. Imagine, month and a half, 1 month and a half for chop. You buy something for 2 months worth of time, you toast. You're thinking like, okay, now we go, now like, okay, you had one here, this, but it's just, you going nowhere. 1 month and a half it took for 5 waves to complete. And then took another setback. And this is why diagonals are very hard to trade and they take forever to complete. So always remember that. Leading diagonal, which always starts on the bottom, ending diagonal, that is ending the trend up on the top, it takes forever to complete. Once it completes, see, diagonals usually retraces back down because it forms in the bottom with five and then three down. Ending diagonals, they have a sharp reversal to the downside. They just because the price is just exhausts itself, runs out of gas. There's nothing for them to run. I don't know if it is, but we just gonna watch. I know ending diagonal. I don't know what I can if I can find an example for you. No, that you can see. NVIDIA is good. NVIDIA 1, 2, 1, 2, 3 is right there, 200%. I don't know if it's due for some sort of fourth wave. It's within this area 1, 2, 3, 4, 5, or unless we just make the same thing here, put this three here, this, you see, like you can change. No, not gonna fit. Something like I can change all this, but you don't wanna get yourself too confused. So you can just do that. This three should go here, like this. Yep. We'll break this thing down in three. There you go. Good. So now this is some sort of a third, fifth of a third, bit of a setback in four, then five, because you have three versus one sitting at this 150. You just need to fit this five smaller waves within this 61.8. See, this is I'm telling you, this market is getting very close to this 161.8 Qs. I was already there. Uh, NVIDIA is near the 150 mark, which is 161.8. S&P 60,095. Right now is at 6,000. These are textbook prints for three versus one. Okay. The only other thing, if the third really accelerates and it has a lot more, if the price keeps on pushing, yeah, it can get up to 200. Same thing with all the other ones. It's all about the third is just, you see all these gaps. Look at this gap here, and little gap here. It's always going to have gaps. Yeah, it's always difficult to, yeah, it's a lot of time. If you ask, you, you should not be counting this, you know? You should not do it. You need years and years of experience to count these smaller sub-minute and minute waves. These are gonna throw you off really bad. This is all you have to do. Simple wave count. Manage to count five up, three down, three versus one. Leave the trade open. Leave the way it is. That's it. That's all you have to do. Forget about everything else. You just need to see if the price can get to 150 or not. Once you're starting to see price try to roll over, then you can make the case for a fourth wave. Is it a one? Is it a two? Is it a three? Is it a four? Is it diagonal? Is this? That? Don't even waste time because you're never gonna be able to figure it out. This is when Elliott wave gets very messy with these smaller waves, which is this minor, minute, this minute, sub-minute. These four will destroy you mentally and physically. You need a lot of experience to to run a wave count like this on a smaller waves. And stay on a higher time frame, you will improve once you will have several years of the practice, and then you have experience that you've done so many trades over time. Then when you will see the results, like, okay, fine. Then you can get yourself into these smaller sub-minute and minor waves. Other than that, do not waste your time. You're not going to go anywhere. You're new to something. Yeah, it can. Of course it can. It can go up to 261.8. Here. Third goes, it goes. That's the thing about a third wave. This is what you call the money wave. You don't know this thing can rip all the way back to 200 without even backing off at all. Like it could have minor dips, but we just don't know. The upside projection for third waves are these: 100, 161.8, 200, 261.8. Third can end anywhere. The ideal textbook print for third wave is 161.8 and 200%. A lot of time when you're gonna get here, you're gonna poke a little bit up higher. You're gonna set back in some sort of a smaller degree pullback. Yeah, 200 usually don't break that fast. When you're gonna come here, yeah, you're almost out of gas Because once you're gonna hit this mark right there, every indicator you're gonna look at them is gonna be completely overbought. Once it's gonna reach that mark. So yeah, you don't know that. So it's just I show you guys a lot more detail. Elliot, yeah, I need to probably making it like you just have to make sure that everything fits right. You know, it just I go back to what I had it before. This way you will know. That's it. So you see, like we don't know if this is the fourth here, if this fourth comes here, or this is the smaller. You know, you just always like sitting like guessing. This guy Ruben wants to update every 10 minutes. It's like, dude, relax. Every 10, 15 minutes, update this wave count, update this wave count. It's not how Elliott works. Elliott works on a bigger time frame, much better than smaller 1 hour time frame nightmare. What I was gonna show. This is up. This is reaching 78.6 now off the October low. See, 100%, 78.6 retracement from peak to trough, 431, 161 at 450, all time highs 451. I don't know, man. I mean, it's so damn, it's just back off a little bit. God damn. I mean, just kind of annoying to be honest. I love to play the upside, don't get me wrong, but they're just, I don't know. It's just, you give some buyers some chance to get in. I mean, I understand trend is very strong. There's no doubt, but nobody ever expected that either, right? How many people have lost money, have blown accounts on this? That's crazy. And you think it's gonna you and you think it's not gonna happen again? Of course it will. 100% it will. Massive spike in volatility, another 15-20% drop. Well, when is gonna happen? Well, I don't know. Neither do you. There's 25% SSU. That's a bear market right there. Bear market starts here, 20, right there. Right here. The official threshold of a bear market is 20%. The Wall Street Journal will be the main headline. U.S. stock market enter a bear market. Lasted very few hours. Rips right back up. This market has room to run. It's all here. Nobody wants to believe me. Market has room to run until 2027. Minimum. That's the minimum time. How the hell? How in the world your fifth wave is going to be shorter in time duration compared to your one? Your one lasted 73 months when S&P was $16.68 back in 1950. It's just such a clean wave. Like the longer term wave count. 1668 was the low at 1950 up to October 1968 high of 109 was 73 months. A correction here, a crash happened. Okay, lasted 2 years, which is this correction. Of course, you have five waves up, one, two, three, four, five. Each smaller wave one, extended wave five is totally, normal. And then you have a 24 months here. There you have a third wave, three versus one, 1277, lasted 101 month. 101 month, high was 1552. Three versus one, the textbook print is 1277. There comes another three wave correction as a crash, down 36 months. The previous one was 24 months, so it met 24, 24 side by side, the time relationship and the price, right? 24, because your wave four most of the time spent exactly the same time with how long the two was. Okay. So 24, 24, but then it can go a little bit more because fourth wave is always going to be a nightmare. But the minimum is how long the duration of the wave two was when the four is going to start. So now if you're going to take this to this, because this is the motive wave, this is the minimum time. So it still has room. Now if you take the channel, take the two, take the four, and then project a parallel line on the top of the wave three that you had, this is all the room that you have left. It's called your air pocket. That's the channeling technique that Elliott uses to project the upside for the fifth wave by using a parallel channel between two and four placed on the top of the three. That gives you a target of wave five. It's a well-defined, the most cleanest wave count in the world you could probably ever can find. People calling this, I don't know. I wrote this is like three, 5 + 3 versus one. This I have everything here. I even posted this thing on Twitter as well. It says right there the confluence of fib time, which I have them here 100%. I want to see what how the 100% 5 versus one suggests this to be completed by by April 2027. Right there. That should be a minimum time frame for this to satisfy a wave 5. Okay? Minimum. If the 5 get extended, then we will look for a far right projection. Then I'll run some time here on the side. But the thing is this, the channel, time, price still has a lot of room. The market has a lot of room to the upside. It's going to take years, maybe decade, I would say, for this channel to break. For you to even consider well, we're just going to go into a massive, huge bear market for a long period of time. It's a very long time frame. This is the beauty of Elliott wave. When you go and start working on a much higher, bigger time frame. But for this to get yourself a reward, well, you need a stomach to hold and buy something. But if you sit in and looking at three other guys on a Twitter thinking the sky is gonna fall and the world is coming to an end. Well, there you have 10,000 different downloads. Okay, I'm out. I don't want to be in too expensive market. No clarity, this and that. I mean, this thing right there looks all beautiful and stuff, but don't get me wrong, it has several bear markets here. This is even have a COVID right there, but this just on a when you look at a when you look at them on a bigger scale, you just don't see those big huge um drops because of a much higher time frame. Look at 3 versus 1. These are like these are like textbook prints. Look, 38.2 retracement. Typical retracement for 4 versus 3. This is a very clean wave count. Here, wave 2, 23 and 38.2% retracement. 3 versus 1. Here's your fourth wave, 23.6, a flat. This is a flat. Flat and a flat. Motive wave, motive wave, motive wave. This market has a lot of upside. So what are we at? 25, 26, 27. Yeah, April 27. It's kind of really starting to put a lot of, I don't know. I mean, I really don't want to make these assumptions or predict the future in something. It's just like I simply go off this Trump 1.1, 1.0, and 2.0. We've been tracking this for months now, I would say, right? Been working like a charm. So it's just his term is he's just he took off his hair. See, look, his like, the stock market right now is just getting to his level where he took the office. Look at that one. So if the stock market is the break even, that's whatever, 1.5 points. Is same as his presidency right now with the stock market performance. But you have to think the same way as well, like where you think that he's not gonna get any upside in his term. Of course he will. It's tough to bet him. Guys, that's why I'm saying my S&P target 74.50 with 2.0. I mean, could be next year, could be this year, who knows? We have we run our projections. Those are our well-defined targets. When we gonna get there? Oh, I have no idea. I cannot give you that time. You know, that's a challenge. COVID crash, 200% bear market, 200% bear market. The market is repeating exactly the same pattern, man, almost to the penny. Look, just pay attention to the screen. Just pay attention to the screen. Peak to trough decline, 200%. Peak to trough decline, 200%. Bear market, bear market. One up right there to 200. This one went up to 200. Next one is going to be 200 again. Why? Because it has happened twice. What has happened twice has a very high probability is going to happen again. Just repeating exactly the same thing. Two bear markers at 200%. The next is going to be here. They might market puke again. Totally possible. But let's get there first, then worry about the rest. You know, might get there. I don't know what kind of a deal they're gonna make. Oops, just this. Yeah, here you go. 24% upside. That's a lot. From the closing price of 6,000 to capture a 24% upside under his presidency, I would say, I think is a totally doable number on him by me. I mean, if this guy who had a pretty bit of a roller coaster, he came here, he went up 27, washed out everything, back to 27, as you see. He came here, so he rallied 27, washed out 27, recovered 27 up till here. Here, you need always going to be more upside. Okay. Recovered all the way back here to this level. And then he went back home by the time he is here. 26%. What do you think this market is doing in front of you? He left, COVID happened. He came right here. January 20, whatever the 2022. 27% rallied, 27% decline. We managed, went all the way back up to break from to this high. Right. AI boom, 26%, 26, 27% up till here. 20, I don't know what bars I made a line bit thicker. I put it there at 25, 26%. So if I put a same price tag from the closing price where he's about to get break even, don't you think is a reasonable target to the upside? Is the same thing we've been doing here? Tell me I'm wrong, or I'm just not making any sense. It's totally, I mean, that's what I'm saying. It just, for me, for 2.0, it's a 74.50 target. So if I buy Monday a $6,000 leap, I don't even know if I can go up 4 years by the time he's going to leave the office. Can you get to 74.50? That's the question. You know, that's the question. Can we get a 25% upside? It could be even more. I don't know that, but that's just a reasonable target. Just a reasonable target, just for what we see from his term until the last term. Sorry, the last previous administration to this for the now they were just starting a new show. It's still new basically. It's still 6 months. We still got 3.5 more years to go. Can we put a 24% roughly target from 6,000 as of yesterday closing price? I think it's a very reasonable call. Almost a what, a 2 standard deviation move? The best reward for this trade, you can just basically, I don't even know if the option chain has that much, you can go that far out. For me, I would absolutely just put a 65 and 7,400 call spread and just leave it. Don't even look at them. A couple of that would the best. That's what I would do. But I don't know if you can go out when when is the last something long term and just don't ignore all this nonsense. Well, you can go out. S&P has 20th, well, 20th December 30th. What the hell is this? It's a June, July, January. Oh, so they're going up to next year. So you could buy, hang on for a second. So we are in, God, I'm looking at the S&P
Well,
cash.
can you switch screen?
Huh?
You're not showing the right screen when you are talking. You're talking about option chain, and you're still showing this.
Oh no, I'm looking at my phone.
Oh, you're looking at your phone. Oh, okay.
Yeah, I have my phone right now. I'm looking at the Thinkorswim app. Yeah, I don't have a Thinkorswim up here. There's no need to. Just reading S&P, just buy something like and just it will take several years, but whatever. Yeah, those are 100 points widespread. See, I'm looking at the very last one, 20 December 30th, which is, yeah, 7,665. Now looking, let me see what the SPY shows. Oh, SPY, you can go, whoa. SPY, you can go up till 17th December 27. Huh. Which is 923 days.
SPX, you can go all the way to December 2030.
Yeah. SPY is, look at SPY, this is 17th December 27. It's very long term. But again, this is like basically what you're doing is you structure a trade for 3.5 years until he leaves office. That's it. That's what I'm thinking. Okay, because he is about to break even on his mess. How much upside does he get? How much market is he going to push? That's what we're gonna see, right? So any upside that comes from here, okay, that will be go under his name by the time he's gonna leave the office. So his presidential term cycles are they're pretty strong. Not his like overall presidential cycles are pretty strong. It tracks the performance of each president, like how the stock market did with his term, this and this. Because his term on his previous one, it was wild, right? So golden age or whatever, egg or whatever you want to call it. I think it's a good bet to make with to target a 65, 7,400 call spread. 400 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 call and just leave it. Yeah, you're gonna have a lot of back and forth whipsaws, this and this, but that's the risk that you're willing to take with the plenty of time in your hand. And see, you go hit a 7,400 mark, close it. Do one. I mean, we can do one. Just throw it there and leave it. I don't mind. We could do a SPY. It's gonna be a little cheaper than S&P. S&P is gonna be very expensive. Something to think. Always think ahead. We don't, unless you are thinking that he's never going to see an all-time high. That's a totally different debate. You know, he's ruthless. You're gonna. It's a very good chart. Very well well-defined levels, well-defined fibs, the time. I think it's a very good chart. Just wanted to, if you wanna, we can continue this from here, like from can just keep like counting each presidential cycle in between because this is a weekly time frame anyways. So we have one Trump 1.0, right from the COVID, plenty of time. So we have COVID here. Here came Biden. Biden ended here. Trump came. There's 2.0. Then we just track his 3.5 years here. So more and more the price, and then we'll start the new president. We'll just keep continue this thing and see how is the overall, the performance plays out with each president. It's the best way to do it because the market is just literally repeating exactly what is since COVID as you see it. You know, like 27 down 27. You see is like, and then you get to this mark basically here, this bar 38. You always need more right here. That was a break even point of this high. And then from here, you take the high of this bar to the high. And it's only 2, 3 points, 26, call 25, give or take, who cares? 24, 25. Yeah. Now from here, I'll put them at all the way. I would leave it here. There you go. It's better to leave him on the day that he left. Would be better. Then he came, poked a little bit, took a dip. Now we're coming right back up here. So we'll see. Okay, let's go. I gotta go. Oh, 15. Okay. Enjoy the rest of your day. I gotta stop this recording and then